Hey guys, welcome back. So in this video, I will show you how to start and stop a trading strategy based on the market volatility. So is it possible to turn off and on trading strategy based on the market conditions? For example, if it's too volatile, you may stop trading strategy, and then when it is normal condition, then you can resume the strategy. And I will show you Excel tutorial basically how to do that. So the first step is downloading the data. Let's go to nscindia.com and you can go to the market data historical reports. Here under indices you can download the historical index data by clicking here. Here let's select equity. Inside that we are selecting Nifty 50 and let's take the time period all the way from 2000 till today. So once we click the submit, it will show the data which we can download it in the CSV format. I am copying all the data from here to the new Excel sheet where I will be doing the analysis. Let me add a filter so that we can sort the date column from oldest to newest. Also let me change the date format to short date. So now you can see the date starts from 2000 all the way up to 2025, so which is a 25 years daily Nifty 50 data. So to do any analysis we need to calculate the returns. Instead of normal returns I am going to calculate log returns, which are more suitable for backtesting. So I am adding new column log returns. So I am using ln function for logarithmic and I am going to use close prices only for return calculation. Double clicking on this edge will populate the data for the entire column all the way up to 2025. So now we have our log returns. I am going to calculate volatility. Instead of calculating volatility for entire thing, I am calculating rolling volatility for 100 days. So for each 100 days there will be one volatility number. So I am going to leave first 100 rows. In this case first 2 rows are empty, so I am going to consider from 102. So I am using the standard deviation .s to calculate the standard deviation of the returns till that point for the last 100 days. So now we have standard deviation of the returns that we can multiply by square root of 252 to convert it into annualized standard deviation. For interpretation benefit, I am multiplying it by 100. So now we have 38.13 as the volatility number. This is a custom volatility number that I have created, which is an annualized standard deviation of last 100 days. So if I double click on this, it's going to populate for all the rows. Now to see the top columns, let me freeze the first row. So now we can see this top row even if I scroll this. So next step after calculating volatility is identifying the direction. So the condition I want to identify is it uptrend or downtrend? Is it volatile or is it normal? So these are the conditions that I want to see. So let me add simple moving average, and typical length for simple moving average on a daily time frame is 200, which is standard. So to calculate simple moving average of 200 length, since the first row is the header, I am going till 201 row, and here I am going to calculate average, the close price average of last 200 days. So if I double click here, I am going to get, so this is the SMA indicator you generally see on the trading terminal. So I am going to compare close price with SMA 200. The reason is that if close is above the 200 moving average, then it is a uptrend. I am going to compare this close, is it greater than SMA 200 or not. Double clicking this is giving the formula entirely. Sometimes the close price can be above SMA 200, but the trend may be sideways. Once it crosses SMA 200, it can stay there, but it can be sideways instead of trending upwards. So I am going to compare 30 days before what is the SMA and today what is the SMA. If today SMA is greater than 30-day SMA, then clearly it is an uptrend. Otherwise, it could be in sideways. For example, let me draw it. If these are the candles, so SMA could be like this. It is still uptrend, but it is not fully uptrend. You can see it is kind of sideways. The moving average is not going anywhere, even though the close price is above SMA 200. That is why I am comparing today's SMA with 30 day before SMA to check if this is higher than 30 days before SMA or not. So to do that, I am going up to 31st row and then I am comparing if this SMA 200 is greater than this SMA 200 or not. And then double clicking this is giving this. But here, since we don't have any data over here, so it doesn't make sense to calculate till 200 rows. On top of that, since we are comparing SMA today with 30 days before SMA, since this is the first SMA, I am going to delete 30 rows. So now this is comparing this close is greater than this moving average or not. Since it is not, this is false. And also this moving average is below than this 30 days before moving average. So this is also false. So clearly it is a downtrend since close is below the moving average as well as the moving average is falling. So let's build a trend condition. If this is true and this is true, so we will have to add the AND condition. Then we are going to say uptrend. So let me add one more condition to identify the downtrend. So if this is false and this is also false, then we have clear downtrend. If there is a mix, then we can call it as a sideways. So if this is true and if this is false, that means the close is above moving average, but the moving average is falling. So then it becomes false. So in that case, we can call it as a sideways. So I will have to add one more if statement here. So you can see if both are false, this is a downtrend. If this is true and this is false, then it is a sideways. That means here close is higher than moving average, but the current moving average is still lower than past 30 days moving average. So it is still in downtrend. The close price is telling uptrend, but this is telling downtrend. So we have no clear trend. That's why we are calling it as sideways. So here if you see, this is a clear uptrend. The close is greater than moving average as well as current moving average is higher than the previous 30 days moving average. Let me add volatility condition. So if I look at the volatility, I am going to calculate the median of volatility. Which is 16.97, which is close to 17. Since this is a median of entire volatility, so I am going to consider if the current volatility is higher than this number, then it's volatile. Otherwise, it's normal condition. So I am going to consider 17 as the cutoff. So I am going to add if condition. If this volatility is greater than 17, then I am going to call it as volatile. Otherwise, I am going to call it as a normal. So let's build the final condition, which is a combination of both. So I am going to use concat formula. This is the first text, and I am going to add space plus space and add the last condition. So it's going to give me the final condition. It is downtrend but volatile condition. Let's build a new sheet, basically to understand how many days are too volatile and they are in uptrend. So these kind of conditions. So I'm going to use unique formula, which is going to give me unique values of this column. Since I don't need these two, I'm copying these and pasting it as values. So now I have all 6 conditions. Let me rearrange it. So we have the 6 combinations. So to count it, I am going to use COUNTIF formula. The range I want to compare is the n column in the sheet 1, and the value I am going to compare is this value. Similarly, I can drag this till here to get all the values, and total number of days is sum of all these values. Then I am going to calculate percentage. To fix this value, I am going to press F4 here, which will fix this value, and only this value will move. So we have now all the percentages. I'm going to add the percentage format to it. So if I plot this day type versus the percentage, I'm going to pick the pie chart, add the data labels. So how to read this chart? So you can see the uptrend condition, the normal days are more in uptrend compared to volatile conditions. So that means whenever market is in uptrend, it is normal most of the time compared to volatility conditions. But at the same time, if you check the downtrend normal condition, which is 3%, versus downtrend volatility, which is 14%. So that means whenever market is in downtrend, it is more volatile compared to whenever it is in uptrend. Finally, if you look at sideways, in sideways also, the market is more volatile compared to the normal condition. So the summary is, whenever market is in uptrend, the market is in normal condition. If it is in downtrend, it is volatile. If it is sideways also, then also market is volatile. So now you can understand, if your strategy is performing very well in normal condition, in uptrend condition, it may not do well that much in downtrend condition plus volatility conditions. So here I am going to call it as a strategy. So from my previous video, I have backtested a strategy. I am going to take returns from that strategy and the date column. So this output I got from the Python backtesting. So these returns are after charges. So these two columns I am taking to our current Excel. So this I am going to format as percentage. As you can see, this day we have made minus 0.49%. Similarly, on 2024 November 28th, we made minus 2.3%. So these are all the returns for each day. Now I am going to compare these days with these returns. One way to do it is, let me take this entire numbers over here. So let me get day type for these dates. So I am going to use VLOOKUP formula. This is the lookup value, and the table array is going to start from B column all the way up to N column. Next is column index number. So if we count this table, so we need a 13th column as a output, and we want exact match. So we got this for this date, which is uptrend plus normal condition. So now let's look at for the strategy, because these count values are from 2001 or 2000, but we want the strategy day types from 2011. So let's recalculate it. So I am going to use COUNTIF formula. This is the range, and this is the value that I want to compare. So 1037 days are uptrend plus normal. Similarly, I can get for all. Here I am going to get sum, and same way I am going to calculate the percentage. So from 2011 January all the way up to 2024 November, the uptrend plus normal days are 1037. So most of the days are uptrend plus normal conditions. Now let's look at the returns. On these days, how much returns we are generating. So instead of count, now we need sum of the returns. So I am going to use sum if formula. Sum if the range is this, and the value I am comparing is this, but the sum I want on the returns. So I am going to change the format type to percentage. So the total returns are 622.49, which is coming here. Now let me calculate percentage of these out of the total returns. Again, I am going to press F4 to maintain this value as static. So here 295% out of 622% is 47%. Now we have written percentage day wise versus how many days are there actually. So that percentage also we have. Now we can compare these two. So first let me plot this days percentage as a bar chart, and for this I am going to add the data, add. Here series name is returns. Let me call it returns, and the values are here, and this series I am going to rename it as days. Here I will add data labels, and I will increase the font size for us to see clearly. So what we are seeing here is that out of total days, 57% are uptrend plus normal. In that we are making 47% of 622%. That means we are making 295% on these days, which is 47%, but the days are 57%. So that means we are underperforming on these days. We should have made 57% here, but we only made 47. Similarly, you can compare. So in both uptrend conditions, we are underperforming. In downtrend normal condition also we are underperforming. But in downtrend volatility conditions, we are performing very well. That means if market is in downtrend, if it is volatile, then this strategy make very good amount of money. And in sideways, if it is normal, then it is as good as the number of days. So here the returns are higher than number of days. So what this tells us is, since all the type of days are giving us positive returns, so we can consider this strategy across all days. But if you want to optimize it further, you would probably remove these 2 days to avoid over trading. So here out of 8% days, we are making 6% of the total returns, and out of 2% days, we are making 1% of the total returns. So the 44 days out of 1811 are downtrend plus normal day types, which is 2%. That means 44 out of 1811 is 2%. On those days, we made 6%, but total returns we made is 622%. 6% of 622% is 1%. So on 2% of the days, out of the total days, we are making 1% of the total returns. So wherever this number is higher than this number, that means we are not performing well on those type of days. So these are the days where we are underperforming. So let me mark it in red. And these are the days we are either same or overperforming. So let me mark it in green. So these days you should definitely trade this strategy, since we are generating higher returns than the number of days. But these days we are generating lower returns compared to the number of days percentage. So since we are generating 295% out of 622% on uptrend plus normal, we cannot remove the strategy on these days. But you can choose to not to trade on these days, which is downtrend condition but normal conditions. But if you don't want to do that much optimization, then ideally I would go with all type of days for this strategy, since on every single day type it is making the positive returns and there are no negative returns on any type of the day. So for this strategy, I will trade it on all days. I will not turn off the strategy based on these day types. But you may find a strategy where you may find a negative returns on certain dates. So this is how you can turn on and off strategy based on the volatility. I hope you got the idea. Please hit like button and subscribe to this channel to get more videos like this. I'm going to plan more analytical videos, backtested trading strategies, and teach you how to use Python and AI in finance. So hit that subscribe button. Thank you.